All right, staying on deals, SPAC activity has fallen to its lowest level since 2020, according to new data out today. Yahoo Finance's Alexandra Semenova has the details. Alex.
Well, Brian, the SPAC party that raged on Wall Street last year officially appears to be coming to an end. The market for SPACs, or special purpose acquisition companies, has gone through some cool down periods here and there, but last quarter, the volume of public offerings through these blank check companies reached the lowest level since 2020, before what has been called the SPAC renaissance began. According to data from PitchBook, only 78 SPAC listings were issued in the first 3 months of this year. This is sharply lower than the first quarter of 2021, which saw roughly 300 SPAC IPOs. The median deal size on SPACs this year also fell to half of what it was last year. There was a major drop-off in activity for de-SPACs as well, which are companies merged with publicly listed SPACs, only about 30 such deals compared to 81 in the same period last year. This slowdown comes as investors more broadly have turned away from more speculative parts of the market, which has caused an overall rout for these types of companies that are often overvalued and not yet profitable. PitchBook pointed out that de-SPACs specifically have significantly underperformed the S&P 500 generally in recent years, but with losses really accelerating into this year. And some of the big names of companies that went public through these types of mergers are electric vehicle maker Lucid, which was down about 47% this year as of yesterday's close, and the sports betting company DraftKings, down about 40% year to date at yesterday's closing bell. Guys?
So I think the natural follow-up question to this and seeing this data, this drought in SPAC deals, is what is driving this relative lack of deal making so far this year?
Well, Emily, a number of factors are dealing a blow to the SPAC market. The first is just the overall underperformance for these types of companies in these current market conditions. And the second is the market correction that we saw this year has led investors to reprice some of those hefty valuations on pre-IPO companies. The same way that companies pull traditional IPO plans during negative pricing environments, it's likely that plans for new SPAC listings and SPAC mergers have also been delayed until there's more clarity in the markets. And then, of course, also dealing a further blow during an already tough period for SPACs is the SEC, which has proposed rules that would strip the advantages that SPACs have over traditional IPOs. One of those proposals includes stricter disclosures on future projections for these types of companies. Guys?
Yahoo Finance's Alexandra Semenova. Good to see you. We'll talk to you soon.